Why understanding China matters to you?
It has been a special joy for me to be there through the last 36 years. It's a great, interesting place to invest.
Share with us your strategy in China.
To achieve a balanced portfolio, what I call an all-weather portfolio. I start with that point.
You said that the world's market allocation very overweight in the US, but very underweight in China.
When you have a leading economy, a world's reserve currency, that the world wants to invest there and save there.
Thank you, Ray, for joining Top Investors Talk. You've been interacting with Chinese people, culture, value in the past 36 years. I guess you are the best one to answer the following question. Why understanding China matters to you and the investors who are eager to invest in China?
Why it matters to me is very much because of a love that I formed for the place and through my experiences over a period of time. Plus, it's a great, exciting investment. For me, before there was a stock exchange in Shenzhen, there was a group of 7 people who were responsible for starting it. And I was being able to be part of that in terms of thinking how it would operate and work with those people. And they become great old friends over periods of time. So it has been a special joy for me to be there through the last 36 years, as you point out, and to be part of that all through that period. But also, it's very exciting to me to see the developments of those markets and the capital markets and to see what's going on and to recognize the opportunities and the investment opportunities. And as a global investor, I get to compare markets. I've been doing this for over 50 years. Why do I want to invest in one place or another? And for me, when I watch this, I realize, it's a great, interesting place to invest. If you just even think about, let's say, development of new industries, technology, there are only 2 places in the world really that are doing it in scale, and that's the United States and China. So if you believe in artificial intelligence and technologies and all of those things and where you're going to develop them and the entrepreneurship, really, those are the 2 big markets.
Now I can understand why Bridgewater increased the holdings of Alibaba's share in the second quarter along with other tech names. Among the top 10 heavyweights, there are also 2 ETFs tracking China indexes. Can you share with us your strategy in China?
Well, first, to get the right balanced exposure in China, I always start with balance. Balance is the right mix between stocks, bonds, commodities, and so on to achieve a balanced portfolio, what I call an all-weather portfolio. I start with that point. And then I take tactical deviations from that based on where we have unique insight. So we have timeless and universal rules that have worked across countries and across time. So we apply those to Chinese markets, having to do those things. And then we get into individual security selection with a team of people who does that. So that's our approach.
Given the market distortions we had right now and your fund's performance so far this year, can you stay with the original investment science or you have to invent something new for the next 10 years?
Well, we're always inventing things that are new. Our China fund has done very well. I think it's up like 25% this year, applying those rules. Those rules are, they're timeless and universal. 20 years, we've had, I think, 1 losing year. And that was with the pandemic. We got caught by surprise. But we need to keep learning.
If you don't mind sharing with us, what is the reason for Bridgewater's pure alpha underperformance this year?
Pandemic caught us by surprise. Unfortunately, I didn't study pandemics before. We fell behind when that happened, and then since then our performance has been consistent with our expectations, but that's what caught us.
You said that the world's market allocation in investing is very overweight in the US, but very underweight in China. Could you elaborate more on that?
Yes. It's so true through cycles that when you have a leading economy, a world's reserve currency, that the world wants to invest there and save there. And so it builds the financial centers, it builds investment, and a lot congregates there. the size of the investments become disproportionate to the size of the economy. And in fact, it even allows countries to borrow more than is healthy to borrow. And so as a result, we have a lot more market capitalization in the old markets and the previously established markets than we do in newer markets. If you look at the relative capitalization and the relative merits of a market like the United States and a market like China, you would say there's a lot more overweight because of that than there is in China. And that's changing. It's changing because the markets in China are opening up. Government will move more to internationalization of the renminbi. Those markets will develop their liquidity and their capital structure and so on. In China, it's appealing because, for example, Chinese interest rates are attractive relative to US interest rates. Chinese growth is attractive relative to US growth. Entrepreneurship, creativity, new companies that are being listed are attractive. And so we're seeing that kind of move. And it's reflected also in the benchmark indices, increasing the size of the allocations to China. It's part of an evolutionary process.
How will the deglobalization in a hyper-connected era change our world? And what's China's role in the next phase of deglobalization?
Well, it's going to make things less efficient, of course. The resources that are going to have to go into new development could have gone into making progress, and there could have been synergies. But it's a necessary function of the competition and the clash. Well, China's role, I think, is to continue to develop, be all that it can be. How good China will be, or how good the United States will be primarily, how strong they will be primarily based on what they do internally, based on the quality of the education system, based on the quality of the work ethic, based on the development of capital markets to allocate resources, all of those things.